Hey, Brent here. Hope you're doing well. In this video, I'm going to share with you how I passed my first funding challenge. So here on your screen, what you can see are the data that I'm going to go over with you. Okay. So this is how I earned a 150K funded account with TopStep. You can see I generated a total of 11,100 gross profits. Okay. My total losses were 20,050. And my total profit was 31,150. Okay. So that means that my win rate or percent of profitable trades was 44%. And my average profit per trader expectancy, that's the same thing, $54. So on average, I'm generating $54. Let's call it $55 per trade. And I'm winning 4 out of every 10 trades. So that constitutes a winning performance. Now, that might sound, if you're new to trading, that might sound, I don't know, not like a lot or something. Like if you think of anything and you go, oh, well, he wins 4 out of 10 times. Sounds like a loser. No. What matters is the way you manage your risk and how much profit you go for and all of these things together. So there's 3 things we have to consider if we're evaluating my trading performance or your trading performance or anyone's trading performance. 3 things we have to consider. The first one is the size of your average win. The second one is the size of your average loss. And the third one is your win rate. Those are the 3 things. We got to put all 3 of those things together to be able to say, is this effective or not? Okay, so let's look. Average winning trade, $350 right here. Okay. Average losing trade, $213. Profitable trades, 44%. So what that means, if you put them all together, this is the combined number. They call it expectancy or APPT, average profit per trade. And if this number is positive, in my case, it's $54. So it's well over 1. That means you have a profitable trading strategy. So this is good news. And this is why I'm always saying, do not confuse the win rate for anything meaningful by itself, because it's a completely useless number unless you add size of your average win, size of your average loss. Now you can see that my average win is not that much bigger than my average loss. So that's something I want to work on. That's something I've been working on since this. Okay. But I want to share with you how I actually passed, because I failed to earn a funded account many times. And now I've earned multiple funded accounts, and I just want to share with you some of the details and some of the lessons that I learned to be able to get there. Okay. So showing you the stats, we wanted to point that out first and foremost. And I think the biggest takeaway here is to say that, like, you don't need to worry so much about your win rate. As long as your win rate is somewhere around 50%, I think you're going to be fine, as long as you're focusing on managing your risk properly. Now, if your average loss is smaller than your average win, that's good. Okay. So if you have a win rate around 50%, maybe even in the 40% range like me, obviously that works. Okay. And then you have your wins even somewhat bigger than your losses, then you're on track to be an incredibly skilled trader. Okay. So that's good news. Now, my risk to reward ratio is about 2 on this. Okay. Maybe a little bit less. So that means for every $100 I'm risking, I'm getting about 200. Okay. So that's good news as well. Now, how did I pass? So the question is, how did I pass? I passed using my 3 favorite setups. So I give this away. And if you don't have this, I think you probably already have this if you're here. But if you don't already have this, you can go to tradesbybrent.com. And I have this document that I offer for free. Okay. So I traded 3 different setups. And these are the 3 setups that I traded. I traded a breakout. So I'm looking for the market to break out. If we look at yesterday, for example, okay, trading the open, this is the 5-minute chart on the ES, okay? I'll wait and I'll notice, okay, we're going up and it looks like we're going down, and I'll be waiting and watching trading range like this. See, this is a range. Let's mark that in yellow. And then I'll wait for a breakout of this range, okay? So technically, the price didn't break out until we got here. Okay. So you might enter here. And if you entered here, as long as your risk to reward was good, like maybe you put your stop loss, I don't know, maybe you just go below your entry signal, right? So 7.5 points. And then you go for 2-to-1 risk to reward. That number in the middle is your risk to reward. So if you're risking 7.5 points, well, twice that would be 15, right? So that's a breakout trade, right? Just like that, okay? And on the open, you'd have to be a little patient because we stayed in this range, for the first few hours of the day. This didn't even happen until, 10:30 Pacific time. We didn't get above the highs of the open. But either way, that's a breakout trade, okay? And as you can see, I like to put my stop loss 2 ticks below the first leg of the breakout, okay? So I will make some modifications to this sometimes because if I was to put the first leg of this would be here or here, okay? So if we consider this the first leg, that means my stop loss would have needed to be 20 points. Now, I don't necessarily want to risk 20 points. So either you have to not take that trade or you have to size down somehow. And you can size down through position size or you can size down through tightening your stop. Now, it's better to do it through position size. However, if you look at the average bar size, you can use the calculation of the average bar size to calculate how tight you can tighten your stop without getting, without being likely to get stopped out. Now, if I entered here, as you can see in the bottom left-hand corner of my screen, maybe you can't see it, but I have an indicator called the ATR, which measures the average bar size. Okay, now you can see it, right? Look in the bottom left-hand corner of my screen, you can see 7 points. Okay, so at this time, 7 points. So I'm going to look at that and I'm going to say, okay, is it 10-point stop or 11-point stop? 8-point stop? Those are all reasonable because they're less than the average bar size. Okay, so that's a breakout trade. That's the first pattern that I traded. And that's a really good one. And they're easy to identify, right? Because you can probably identify this as a trading range, right? And then you can just say, okay, as soon as we break out above these prior highs, right, you're going to get long. We're getting consecutive bull bars. 1, 2, 3, 4 consecutive bull bars. That's strong momentum to the upside. So you're entering on a breakout. The market's at the moment, the sellers are trapped. They're panicking out. Okay. So they were selling. Now they're buying back their shorts and the bulls are also buying. So both sides are buying, which is pushing the price up and it's only going in one direction. So that's a breakout. And for your profit target, I like to use a measured move of the breakout or a measured move of the trading range or a measured move of leg one. Okay. Or, honestly, these days, the easiest thing, here's what I found actually, once I started using measured moves, is that the risk to reward was basically the same. Okay. So if I measure the risk to reward, for example, of my entry candle, which I have marked there, right? If we measure the entry candle, like for those first two candles, right? So let's say we're just measuring this move and we want equidistant there. That's pretty much the same as going for 2-to-1 risk to reward, right? They end up being almost the same. So these days I like using risk to reward because it ends up being about the same as measure move targets, but I really like measure move targets too. Either way, that's the first pattern. The second one is an FU candle. This is a pullback. Okay. Now I like calling it an FU candle because to me it's really funny when one side just completely dominates the other side, just slaps them around. When the bears take control of the bulls or the bulls take control of the bears, something like that. Okay. So what would be an FU candle? Let's look for one. They're not as common. So sometimes you got to look a little harder. Yeah, there's really none at the moment. Let's see. Okay, so this would be an FU candle, right? Now, why? Because the bears were in control, right? But then they started to lose momentum. Bulls came back strong. Bears were like, no. And then look what happened. This candle is so much bigger than this candle, right? So this is a complete domination. I mean, it's probably twice the size. Just measure it. This candle is 8 points. That bear bar right here. And now let's measure the bull bar. It's 16 points. So it's twice the size. right? That's an FU candle. So when you see that, if we've been going sideways for a while, look, this is a trading range, right? That's a trading range. Like we're going down and then we're going up. And we're just kind of going back and forth, right? Technically, we're still moving down here, but this is very rangy. So when this happens, it's like the bulls saying, it's like the bulls throwing a rock in a pond, sending ripples, okay? And notice after this candle, I want to point this out to you. Look very closely on the chart. After this candle, look what happened. The price never went below that candle. And the next day went up, okay, a lot. Okay, so that's a 100-point move up. That's big. And then look, the day after that went up even more. Okay. Now, if you, let's say you were swing trading and you got long here, that's an amazing profit. Okay. So that's why I like those FU candles, because it's a very clear and obvious change in bias, right? It's one side getting completely trapped and giving up, and then the other side completely taking control, being like, FU, we own this town. Okay. So that's an FU candle. Bull bar after a bear bar in a bull trend, buy above a bull bar or close of bar. This is entering on a pullback after a breakout. Okay. So you could enter here, or you could wait for that test of the bottom. It's probably a better idea. Wait for this double bottom here and here, and then get in here or here. But either way, let's say you just got long there and then you got out there. That's a much faster profit you're going to get. So these are the kind of trades that I took. And you can see the data. If you just look, these are the trades that I took all throughout here. Okay. And it was 15 trading days. Okay. 15 trading days. And I was taking about 2 trades per day. 2 trades per day. So I'm just looking at the chart. I'm looking for 1 or 2 of those per day, just like I'm pointing out to you. Okay. You know, like the first one, that breakout trade, or the second one, the FU candle. Okay. So something like that or that. But let's look at the third setup that I was trading. The third setup I was trading was a failed breakout plus reversal in a trading range. Now, the breakout and the FU candle are for trends, right? But the third one's for trading ranges. And the market's often in a trading range. 8 out of 10 times the market's in a trading range. So for a day like today, for example, right? We did get a bear trend on the open here, right? We got this bear trend, but it didn't last, you know? So that was a, 70-point move down, straight down on the open. But then look at what happened the rest of the day. I mean, pretty much from here on, we stayed in a range. And that's like the whole day. And how many hours is that? That's 5.5, that's 6 hours. It's basically the whole day. Okay. So you got like 1 hour of down, and then we just went sideways the rest of the day. I mean, really, the trading range started pretty much here, right? I mean, honestly, maybe even here. Okay. Right? Because we went down, we came right back up to here. So that sucks. And the market's just kind of going back and forth all day long. It's not really moving in any one direction. So you don't have a chance for a breakout because there's no breakouts. And you don't have a chance for an FU candle because there are none, right? One side is not taking control at all. They're just taking turns back and forth and back and forth. So when you have that, that's when I use my third setup. My third setup is a failed breakout and reversal. So I'm looking for price to be clearly in a trading range environment. So today's a great example of this, right? Great example of this. I mean, it's really obvious, right? Just going, I call this a zigzag pattern, or a ping pong pattern, because we're just pinging, ponging, and back and forth. Zigging and zagging, pinging and ponging. You get the point, right? So what do you want to do? Buy low, sell high, right? Near the extreme. 1 tick above the range or 1 tick below the range using a limit order. So if I saw this, right, this is real rangy, then, okay, by the time, when does this become obvious it's a trading range? Maybe here. Right after this setup fails, and then we reverse back down and we make another bottom here, I think we're very obviously in a trading range. To me, it's obvious from here. Okay. So then what I'll do, now notice, when the price is clearing in the trading range, here we have that. Buy low, sell high at the extreme, 1 tick above the range or 1 tick below the range. Use a limit order. Okay. So how am I going to do that? Well, I prefer to be in the direction of the current bias. So if we were bullish yesterday and then we were bullish the day before that, then the market's been bullish. Okay. So I'd like to buy, honestly. So what I'll do is, if this is when it's most obvious that it's in a trading range, then, and that's the low, then I'm gonna put my profit, my limit order one tick below there. Okay. So that would look something like this. Let me actually play out the trade for you. Okay. So we'll say here is when it's most obvious to me that this is in a trading range. Maybe you too. Okay. So now I'm going to look for a long below. So it would look like this. So you put your order right here, and then you go one, you do a 1 or 2 ticks below right there. Okay. And then I'm going to use a measured move distance of the trading range for my stop loss. And I'm going to use the ATR to round out. Now I'm probably going to tighten my stop loss more than that, but the ATR, I'll make sure I'll round down on the ATR so that my profit target is about the size of, or maybe a little bit smaller than, the average bar size. Now, why would I do that? Because, well, if the average bar size, like in this case, is 9.6 points, you can see that in the bottom left. Yes, you can. Then I want to go for something like a 9-point profit target, because it's like very likely it's going to get hit then, right? I mean, very likely. If I'm going for less, if this move, if the average bar of one of these bars is 9 points and I'm only going for that, then it's just a high likelihood that that's going to happen. Okay. So my order would go here. And where do you want your stop? You want your stop loss to measure move distance of the trading range. So if we measure the trading range, say it's here, let's say from here to here, that means our stop's going to be all the way down here. That's 24 points, so that's a lot. So I'm probably not going to do that. Probably going to make some modifications. Now, what are the two ways that I said that I like to size down? Well, you can reduce your position size, or you can tighten your stop, right? That's too much risk. You don't want to take on that much risk. So maybe 15-point stop on this. Okay. Be more comfortable with that. Now, why would I be comfortable with that? Because, well, that's twice the ATR. So if the average bar says 8 or 9, I'm okay with the 15-point profit target, right? Down here is too much. I don't want 25, but 15 points I'm okay with. Nice, and size down a little bit. Okay. So going for 1 or 2 lots, only trading 1 or 2 lots, maybe three sometimes. Okay. And then I'm going to wait until we get 1 tick below this. I'm going to use a limit order so it's automatically triggered. Okay. And then, like I said, we're going for something like a 9-point PT. And then we're going to look to tighten our stop as soon as we get into that trade. Okay. As soon as we get into that trade. All right. So we're going to have a negative risk to reward ratio, but only for a minute. Okay. Okay. So as soon as it hits there, right, we get into that trade. So now we're into that trade. And if we only got in here and our profit target's there, boom, there you go. Okay. In there, like swimwear, cha-ching, money in the bank. So, and we're using trade replay here, so it doesn't let you actually use limit orders. But if I had my limit order here, like what I want to point out to you is, do you see what happened? Okay. I had my limit order here, I had 2 ticks below this candle. Then notice what happened on this candle. The market reached down right to below where that candle was. And there were bars waiting right there. So what that shows you is this is what institutions are doing. Institutions are doing exactly what I'm sharing with you. Here's evidence. Okay. So that's why I like this strategy. All right. And if you had a 15-point PT and you went for a 15-point profit target, a 15-point stop loss, and you went for 1-to-1, so 15-point stop loss, 15-point PT, you'd get that. And look you would have had your profit target if the market reached down here, tagged you in, and then on the next candle shot right up, and then on the next candle, literally you would have made 15 points like this. Okay. So that's how I passed the TopStep evaluation. And I just want to say something about discipline. This took a lot of discipline, and it took a lot of practice to develop the kind of discipline that this required. It's probably easier to trade your own account than it is trade with a prop firm with their strict rules. But I liked it and I embraced it because I felt like it was teaching me discipline. And a combine, this is called the combine with TopStep. And a combine is something they use in the NFL that trains football players and it tests their skills and it's supposed to make them better. Okay. So I liked that. And I felt like this made me a better trader. So I'm going to share all this data with you. All this data I'm sharing with you. I'm going to give you this document. You can go over and see every single trade that I took to pass this 150K challenge. Okay. All the stats, everything. And if you have questions, post those below. Thanks for watching. I'll see you in the next one.